Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got a bit of a slightly lackluster session last night. The S&P 500 down 0.4% for its third straight losing day, closing at 6,339. The Nasdaq Composite slightly underwater, pretty much flat, down 0.03%. And we have the Dow Jones Industrial Average tumbling 0.7%, around 330 points lower. We did see some bright spots coming through from the likes of Microsoft and Meta, both up on the back of better than expected quarterly earnings. Let's check in now with Daniel Tan. He is the portfolio manager for Grasshopper Asset Management. Daniel, good morning. How's your day going?
Morning, Ryan. Yeah, my day is good. I just finished off the US session.
Yeah.
Trading session.
So let's get into the latest session. What are you taking away with the market sentiment right now, where it seems like there is a bit of appetite for risk starting to sap right now with what's going on in backdrop?
Yeah, so what happened this week, the major thing was the FOMC. It happened on Monday. It came within expectations. The Fed did not do anything, and they reiterate their focus is on inflation. Inflation is still their main concern. They have lesser concern on unemployment data. So regardless of what Bowman and Waller, which we know that they are pro-Trump, saying that we should focus on employment data, Powell is focusing on inflation data and choose to be data-driven in the coming few FOMC meetings. So they have not do anything for the last 5 meetings. And that somewhat disappoint markets. As we saw the later half of this week, we saw equities selling off.
Yes. So we had the FOMC committee voting 9-2. Like you pointed out, 2 of them voted against the committee to keep its benchmark steady, which was what happened. They wanted to cut it earlier. To your point, perhaps it's a pro-Trump position. Also worth noting, it's the first time since 1993 that multiple governors casted no votes on a rare decision. So something to chew on as well when we look forward to the next FOMC meeting. But to what degree was this shaking up markets in terms of the reaction? It seems like we were not expecting any rate cuts anyway.
Yeah, so I think what was causing this sell-off this week was that in the lead up to last week and the earlier part of this week, people were expecting that because there's some pressure from Trump over the inspection of the Fed renovations, so that Powell would maybe point to a more nuanced stance toward reducing rates in the coming few meetings. But Jerome Powell did not do anything, which disappointed markets, which saw the correction later half of this week. So I think nothing much has changed, just that market has been speculating that Powell will do something about it, that Trump may have some say in independence and autonomy.
Okay, so that's something to watch out for. How do the tariffs factor into that decision?
Okay, so we saw some tariff deals done with Korea, Japan, and Europe. I think what we saw for the tariff part versus before April was that there's been drawback of expectations of how tariff scenarios would play out. We expected a more drastic tariff scenario after April Liberation Day, but it did not happen. The trade deals actually came better than expected, and markets start to rally for the last 2 months. What was interesting was we had the biggest rally in the last 2 months. We had a very good June. We had a very good July as well, where most portfolio managers were making money in these 2 months because tariff scenario did not play out to be as bad as what we thought.
Okay, so let's take a look at what else is also shaping sentiment, which is the earnings coming through. What's your take on how it's played out so far? By and large, it does look like we've got a couple of beats as well as some disappointing numbers. Is it a mixed bag so far, or is it more positive?
So the earnings season, it has just kicked off on Wednesday with some companies announcing their earnings. The forecast would be lower than last quarter. The earning forecast is actually easier to beat this quarter than last quarter. That's primarily because tariff is on everybody's mind. Tariff, as you think about it, analogy-wise, it is like sand putting into the wheels of supply chain and global trade. And there's some economies that estimate that this tariff would actually slow down economy by 2 trillion by the end of 2027. So this quarter is important because we are expecting to see earnings being lower than last 2 quarters where we had more than 10% for quarter one and quarter four of last year. We think that it might not show up in the earnings immediately because given we are not far off from April, but I think it will show up in the margins of companies that are reporting earnings this season. We likely see reducing margin because of what I mentioned about the higher costs on supply chain and global trade. So the other thing to point out in this coming earnings season is also how the Magnificent Seven will perform. As we all know that the Magnificent Seven is a big part of the S&P index, we expect the Magnificent Seven companies to post 14% rise in profit. However, I think we should look behind this number because given that they are so dominant in the S&P, if you exclude these 7 companies, S&P profit is just likely to be flattish or even down by 0.1% versus last quarter. So I think this earnings season will be important in seeing, besides the Magnificent Seven, whether there's any deterioration in the earnings of other companies and as well as the margins that they are reporting. And I think the last point, we have been watching the dollar. Actually, the dollar has been big disappointment this quarter. It's the biggest disappointment for, I think, the last 20 years. It's down 10% this year, and yet the worst 6 months for the last 20 years. And I think FX revenue for companies such as Meta, Microsoft, would be crucial because we have a weakening dollar, right? And they have a huge chunk of earnings overseas, which they will repatriate back to US. So that will have some positive impact on their earnings.
Okay. Softer dollar doing some favors for some of the earnings and more to come for sure. That could help steer markets perhaps to new highs. And we've been in conversation with Daniel Tan. He is the portfolio manager for Grasshopper Asset Management. Daniel, thanks for your time this morning.
Thanks, Ryan, for having me.
Catch up with you again next time. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.